Good morning. It's Tuesday, August 2nd, 2022, and this is another trade review. Actually, I've got three trades today. Before I get into those real briefly, I just want to mention what I've been doing lately that seems to be working a little better. I seem to be getting a little bit of traction with this trade plan that I'm kind of experimenting with these days, and it's pretty exciting because I've been doing this for 14 months, and sometimes I'll have consistency for a while, then I'll have like a string of bad trades. But I think when I do the things that I'm going to outline to you right now consistently and really thoughtfully with a lot of intention, I seem to be winning a lot more often than I used to with a lot more consistency. And I think that's kind of like the holy grail for me is the consistency. So let me just go through really briefly how I go about my morning. Before the market opens, I watch Steve's morning trade analysis, but I really have been focusing primarily on one stock lately, and that's Tesla. Now you could pick any stock; could be Nvidia, AMD, Apple, Amazon, whatever you want. And sometimes if something's really moving pre-market, yeah, I'll focus on that morning. But for the most part, what I found is that to get to know the personality of one asset, of one issue, has helped me a lot. And that for me has become Tesla. I like Tesla because it's a lot of volatility, good big average to range, tends to move up and down the scale nicely. And it's just it presents me with several opportunities per morning to go ahead and try and make a profit. One of the things that I do, I'm doing this more and more every single morning, is before 6:30 ever starts, I get my book map out, I get my charts out, and I mark out the pre-market low and the pre-market high. Right here, I've got that listed in purple. This morning it was 874.39 for the pre-market low, 869 for the pre-market high. Actually, was a post-market high from yesterday. So both of those count. Post-market yesterday and pre-market today can both. You can take the highest of the two. So I just listed pre-market high, but it's really a post-market high from yesterday. So I do those two, and then I put my dailies on. Today it was 877.95, 886.13, and 900.40. And then I watch the market open. So one of the things that I'm doing right now, I just started doing, is that I wait 5 minutes for a swing high to be put in, and I look and see where that swing high was at the 5 minute mark. Today, at the 5 minute mark, which was right here, I'll look back to the last swing high, and it was here at 891.71. So I take these pre-market highs and lows, the daily levels, and the first 5 minute swing high, and I use those as potential levels to trade against. And the same way you would trade against a liquidity level. And I do trade against those as well. So this has given me multiple opportunities throughout the price range to go ahead and find trades. But here's the other key part of the strategy. Those are great levels to get in and into a trade, but only when the indices are breaking out. Okay, the indices have to be breaking out with volume in order for the trades to work out, in my experience. Steve talks about this a lot. I never used to listen to him very much. I was just always like, well, I can't keep track of that many things. I'm like, let me just find some liquidity, maybe learn my breakthrough backtest continuation pattern against liquidity and hope for the best. So, but what I've noticed is that when I take the time to really make sure that the indices are breaking out of a consolidation range with some volume and pushing strongly, and then look for a pattern, or just keep my eyes on the patterns and make sure there's confluence between a pattern and a breakout. That's when I seem to get a lot of traction in my trading. So that's pretty important and takes a little practice, but with some strong intention to only trade during those times and have some opportunities available to you so you can trade during those times. And those opportunities come in the form of having these levels preset on your charts. That's really what's been changing my trading for the better lately. So I just want to share that with you. So yeah, I also look at liquidity levels, and I also look for reactive liquidity and laddering of liquidity and liquidity added in, and those kinds of things. Those are all really important. And for example, I didn't trade this breakthrough back test of the 900.40 daily level, but if you look at it really carefully, because I was already done trading for the day by that time, but if you look carefully, you'll see that it did break through, it did back test here, and then there was liquidity added in here that wasn't there. It was added in here. So you could have picked up any of these pullbacks here and taken a nice trade off of it. I think the reason this one worked out is because you had a good strong breakout here at around let's see, what was it? It was 1041. So if you look here, 1041, that's right around, yeah, right around there. You can see a good breakout out of the consolidation range, in the SPY right there, 1040, 1039, 1042, right in there. Really good, strong volume. Look at volume right there. That's what you want to trade right there. And you want to trade a nice little breakout. See how this dotted white line was the high, and as it really came down, tested that 100, put a strong buyer's wick. Steve was talking about that earlier also. He really wanted to know how it was going to react to that 100. And I think it showed us. But when it came up and broke through here, that's when you had this trade available to you that you could have gotten into and rode it up for, quite a distance up to 920 from, a little above 900 to 920. Anyway, like I said, I didn't take that trade, but I wasn't patient enough apparently. But let me just go through this real briefly and what I did do today. So things were choppy at first. We triple bottomed off the daily level down here, and we shot up to this daily level up here, to the let's see, was that the 880? That's 890. No, I take that back. I thought it came up to a daily level. It did, this one. Okay, sorry about that. Yeah, came up to this daily level, pulled back, and then put in a swing high up here. Then the 5-minute mark ended right around this point right here, and I marked that line with a lime green line for those 5-minute swing high. So then I was just kind of watching how things were going. Things were pretty choppy here. These first 3 candles, they were all, as you can see on the QQQs, there were wicks on both sides on all 3, and the same thing was happening here. It wasn't looking really good. The SPY was actually kind of weak relative to that. Anyway, finally we got like a green candle push here on the SPY on the fourth 3-minute candle, about 12 minutes in, and that was right around here. And so eventually I got in at 893.13, right around here, and on this bounce off the pre-market high that I had just marked actually. So that was kind of cool. See how that came in handy? I marked it at the 5-minute mark, and 7 minutes later, I used it as a springboard for trade. I got in here at 893.12 when I saw this bouncing off this level, and I saw some action here where I thought that was breaking this consolidation level here. It only went up about 1R, little over 895, excuse me, and pulled back sharply. I got out break even. Then I did something kind of stupid. I saw this reversal happen very quickly against this candle, and things start to head down. And the same thing happened here. This candle was the candle I bought in on and got stopped out break even on, and I saw this very strong reversal here, and I thought maybe it's a short side. But what I didn't really stop to think about was that, hey, we're in an uptrend here, and you don't want to break the uptrend line with a short, right? If you just mark this, I mean, we're well above that uptrend line. So that was not so smart to do. I should have waited for sure until the uptrend line was broken. Instead, I got short thinking that I was going to be smarter than the market, and I got stopped out immediately. So that was trade number 2. So now I've got a scratch and a 1R loss. At this point, I try not to get emotional. I usually do get emotional when I get stopped out, and I try to get right back into a trade, but I tried to just stay calm about it. Hey, no big deal. It's going to happen. I could see right away what I did wrong. Tried to short above an uptrend line in an uptrend with higher highs, higher lows. So I realized my mistake, and I said, okay, well, let's stick with the long side. Look for longs for right now. Right then we had another big push in the market, Um, as you can see right here at 9:45, we had this big strong push, and I thought, well, it's kind of extended, but if I can get a bounce off that pre-market high, this purple line, which again I marked that, right when the market opened, right before it opened, just so it'd be an opportunity for me, right? Because I'm looking for opportunities to take when things are looking strong, like they were on the indices. So anyway, I saw that. I go, come on, baby, come on, bounce off that level. It did, and I got in right here at 897.67. So I had a $4 target on it. It actually hit my target, but for some weird reason, I did not get a fill, which really irritated me to no end. The trade pulled back, but and these were starting to pull back. So by any rights, I should have just gotten out here with a 1R, roughly 1R target, but I was stubborn. So I thought, let me just stay in. I'll put my stop to break even. If I hit break even, I'll get out. But I just was just stubborn. I just want to see it work out. So sure enough, it kind of chopped around slowly and filled me up here at my $4 target for a 2R win. So in the end, I got a scratch trade, a 1R loss, and a 2R win. And I figured that's enough trading for me for the morning. 3 trades is enough. Walking away green with 1R, and I'm happy with that. I've been doing well lately in terms of staying green. I just want to stay that way, so I figured just keep the 1R green. You're good to go. Have a nice day. So okay, so that's the trades for the morning and some of my philosophy and strategy for you, and hope it was helpful. And if it was, let me know. That's it for now. We'll see you on the next one.